Welcome. You're listening to the Financial Survival Network. It's Kerry Lutz, and the Swiss unpegged the Swiss franc to the euro, and nothing has been the same since then. Happened right after the first of the year. Precious metals all over the place, the dollar, the euro, the world financial system teetering on the edge. And here to talk about it is our good friend David Morgan of the Morgan Report. Also, you'll find him on silver-investor.com. And David, how are you?
Doing well, Kerry. Thank you.
Hey, well, so we started off the year literally with a bang, and precious metals went up for a bit. Now they're kind of zigzagging, kind of going back and forth, which doesn't surprise me because it just didn't feel like it was quite ready for a breakout, but they're kind of holding steady. What's your feel on things? What's your take?
Yeah, my take, we just published the February issue of the Morgan Report, and as you know, since you're a subscriber, that this event with the Swiss National Bank was really a black swan. And, most of the time that I do interviews with you or others, I always, give my analysis on where we're going, short, medium, and long term. That's usually what I'm asked, not every interview. But I answer the question, and I always have to, swallow hard and give the caveat and say, so many black swans out there that perhaps one would, happen. And if that happened, then, kind of all bets are off, that you're not going to see this grinding up and having to go through levels of resistance and, get the precious metals into the consciousness of people that have left the market and new people to come in, and all that takes to get a market that's, been in the doldrums for years, the last 3 or more for gold and 4 for silver. So a black swan is one of these unknowns that comes out of nowhere sort of thing. And that really was this depegging, because it wasn't hinted at, it wasn't forecast, it wasn't shown anywhere by anyone. And in fact, the exact opposite had taken place much just prior, where the Swiss bank spokesperson, one of the many, said that, we're basically adhering to the peg no matter what, and guaranteeing it, and on and on. Those are my words, but the emphasis was that the peg is here, it's going to stay here, don't worry about it, it's a sure thing, and on and on. And then within probably 10, 12 business days of that statement, bang, they do it on their own, and they do it, from my analysis and others, and this has been probably overdone on the internet, so I don't want to take up too much of the interview with it. But the way I analyze it was that the Swiss know. I mean, they are known for, at one time, their bank secrecy laws, certainly known for their acumen in the banking industry. And so they have the ability to see that this Mario Draghi situation, where he was going to just print like Bernanke and Yellen, that they were not going to have any more to do with it. They just said, I would rather take the pain now and suffer now than what will happen in the longer term with what's going to take place in the euro. So they exited and paid a pretty big price. In fact, I know several fund managers that basically lost their jobs because of this depegging and being on the wrong side. So it is a big event. It is a black swan in my view, and it is something that will continue to have repercussions, because it's the further unwinding of the financial crisis that took place in 2008 that really hasn't been repaired. Oh, certainly it's like an analogy would be the Tower of Babel. The Tower of Babel comes down, and yet, there's still the idea that you could put it back together, or, rebuild it, or get the scaffolding back up. We'll start to get it back together. It's coming up. And, the people there that believe it, that think, oh, yeah, we just had a big setback, but we're on our way, Well, no. That's what you hear. That's the mainstream press pushes. That's the mantra that continues out there on all the business channels. But the reality is no. And this is an event that I think even some of the sleepier out there have woken up to the fact, especially with the Swiss, because most people have an innate understanding, if they don't understand it intellectually, understand it at more or less a gut level, that the Swiss are moving out in a way that means something significant. And of course it does.
Yeah, for sure. And like you said, black swan, yeah, the whole concept of a black swan as something that's flying around that could cause an immense amount of disruption, could even be a crisis. I don't think the Swiss unpegging or depegging rises quite to that level, at least yet. But it's there, but you just don't know it. And when it hits, boy, it really causes people to look up and say, wow. And it certainly did that. And it can't really be a surprise because it would cost them hundreds of billions of dollars to keep that peg, right?
Yeah, it was detrimental. I mean, it worked to their advantage for a while. What's very interesting if you look at it was that when gold peaked at around the $1,900 level, right after that, or just before, I forget, but right in that time frame is when Swiss announced a peg to the euro. Mm-hmm. So they announced a peg to the euro, and then gold started down. So the Swiss currency, although it's not backed by gold anymore, at one time was, and of course the referendum was going to kind of reassert the Swiss influence with the gold partial backing, and that was defeated. But this Egon von Gretz, and I hopefully pronounced his name close to correctly. I've met him, I think, once or twice in my travels to Europe. Very bright, and he was really the only one that predicted this black swan. And he, to my knowledge, is the only one that got it right, and the only one that really saw it coming. He actually said with the referendum, he wrote a fictional piece about what the Swiss National Bank would do with this referendum. And if it didn't take place, what would happen anyway? And this is basically what took place. So my, kudos to him. Back to the, black swan and the instability. It's sort of like, I don't know the name of the game, but, you have all these puzzle pieces. It's a physical game where there's, like a pyramid type structure. It's really not a pyramid, but, and you take out a piece, and eventually you take out enough pieces and the whole thing falls down. Well, when the Swiss National Bank did this, you pulled out a piece enough for the whole thing to topple but not come over. So like everyone got like a little earthquake. Like, oh my goodness, and then of course people go, back to sleep, or it's going to be okay, or the euro's okay, and but then what's happening with Greece right now? I mean, basically, Greece is playing hardball. I mean, the short story on it is it's like, well, okay, we might want to exit the euro, and if we do, then maybe Russia and China will back us. And now the eurozone is saying, no, don't do that. Let's have another look. We'll give you some more time. So they're playing both ends against the middle because they're hurting, and they are, they don't know exactly what to do, but there's another offer on the table. In other words, they're not locked into this Anglo-American empire situation where they dictate, how the cow eats the cabbage. They're in a situation where they can say, you know what? There's another someone over there that has the cabbage called the USS, or called Russia, excuse me, and they're making an offer, and we're going to take a look. So again, more instability. Again, maybe another one of those puzzle pieces coming out and causing another little rumble in the market as a metaphor. So we are in times of very high financial stress. I think, and I'm going to anticipate the question, what's that mean for the metals? It means that the metals will stabilize and work themselves higher. And it also means, as you pointed out so accurately, Kerry, at the beginning, is we got a pretty darn good rally off of the first of the year. In fact, silver was the highest performing asset, I think, in January. Well, that's great. It's true. It's a fact, but I don't want to overemphasize it because, you get a 20, 30% rally in something that's been off 70%. Whoop-de-doo. I mean, I want to be realistic here. I don't want to, David, wake up. Let's, the idea that it went up so much against other asset classes percentage-wise in a month is true, but let's put it in the context of the last several years. It hasn't certainly done that well at all. And this brief rally, I see profit taking. I think it's part of natural market activity. Certainly, I don't really want to discuss the manipulation today. Yes, it's manipulated, but in this particular case, I look at it more or less as normal market activity, meaning that it's just profit taking because these short-term traders, I mean, they're there every day to make a profit on a daily basis. And of course, with the high-frequency trading with the computers, they're there to make money on a fractional second basis. I mean, it's ridiculous in a way what's going on, but this is the reality we live in.
Of course. So you think it's just a brief intermission till it resumes then, huh?
No, I think it's going to be probably half the year, Kerry. I'm actually not looking for real great strength in the metals until probably September of this year. Hope I'm wrong. I hope that, a gray swan happens or something takes place that wakes up enough people that they either have left the market to come back. And there's a lot of people that haven't left the market. I mean, they aren't maybe buying more. They don't have money to buy more or whatever, but they're holding their positions. And there's people that have given up. But regardless, the point is that it's such a small market and people do seek safety and trust and stability, and the precious metals represent all those things. Although the price varies, it's the most stable, monetary asset that you can own. I mean, these things have lasted thousands of years. Name one paper currency that's done that. There aren't any. Zero. So there will be a day where, days accumulating where people start to come back in the market slowly, but there could be a rush again. And I think this, again, first of the year was sort of a taste of what can happen in these markets as far as significant moves in a short period of time. And once we get through what I call grinding higher through the resistance level and this trading and the profit taking and all of that, and then we're going to get to a base level where I think is extremely important, and that's around the 1550 level in gold and 26 in silver. Once those levels are achieved and we are above them, and it's obvious to almost everyone that those levels are not going to be tested again, then we have reformed a base level where we can really start to see these markets, in a very positive light. A lot of technicians will see it that same way because of the way the charts are and the way that the market has displayed itself. And then you will see a lot more people come into the markets. You may see hedge funds come back, and all of a sudden you're going to start getting a lot of buying pressure. And so I really am looking for that to happen, somewhere in the fall of this year. And once that takes place, it wouldn't be too long before we start seeing, the old highs tested in gold. I don't think silver will test that $50 level as rapidly as I might like, but it will exceed it, because the silver market is so small. And once gold gets out of the price range of the average investor, we're looking at pick a number, it varies person to person, but you get into the $3,000 level. Everyone says, well, it's 3 now, it's going to 4, it's going to 5, it's going to 10, no, it's going to 20, no, it's going to 25, I'm sure it's going to 30. I mean, you get that kind of hype. People will say, gosh, I'd love to buy gold, but I can't afford it. Or, my 5,000 buys me one coin, but my 5,000 buys me this much silver. And then you'll see a big move into the silver market for kind of what you call the late participants. And I very much anticipate that. Is my timing on? I don't know. I mean, is it going to happen in 2016, maybe 2017? I don't know. I think it will. I do believe that is the time frame, but I could be wrong on the timing. But I don't believe that I'm wrong on the overall analysis. The overall analysis is that all fiat currencies do meet their demise one way or another. And of course, there's lots of other variables with an alternate currency or, this TPP, that if that takes place, this Trans-Pacific Partnership and these other non-constitutional agreements that are made without anyone's consent, other than the elite, of course, that box us into these situations. And, they might have something like the euro for the, Canada, U.S., and Mexico. I mean, that idea has been around for a long time, called the Amero, and I'm not ruling it out entirely. I mean, it could happen. All I'm saying is that what I do know from history, and I think what most people sense, is that there is a very, very important part of staying alive financially based on the precious metals, but that doesn't mean that you have to, overload or devote your entire life like I have to the study of the metals. All you have to do is basically take a small position and not worry about it. And if you take a small position right now, meaning, 10% or so of what you have on an asset allocation basis, then you can sleep at night. And now's the perfect time. And why is it the perfect time? Because one, no one could pick an exact bottom. And two, you're buying both the metals, silver and gold, basically at cost of production or less for most major mining companies that were profitable not that long ago. So you're looking at major companies that produce the metal, and that's how they make their living, that are not viable at these price levels. And you, as an investor, are able to come in and buy at those levels better than that they can produce it for. And that's all you have to do. Just buy it and wait. And that's a very easy concept, and especially if you do it on the right percentage basis. I've been, I've taken my hits like everybody, and I don't mind. It comes with territory. It's part of the deal. But the idea that, you have, what else is there? Well, there's lots of things, really. There's, business opportunities, there's oil, there's, land in the right conditions. I'm not a big real estate guy, but certainly real estate's a hard asset. And if you have it, let's say cash paid for and the cash flow is positive, that's a pretty good investment. So, there's certainly things outside of the precious metals. Some people get the idea that, that's like the only thing. If the dollar crashes, the only thing left standing is the precious metals. No, actually everything is left standing. It just changes ownership, and things do go away. Farms, some farms might not get funded and others. I don't want to go too deep down the rabbit hole here. But what I'm saying is certainly think outside the box. And that means, what hard assets can you have that are physical economy necessities? What's in the physical economy that's a necessity or going to be one that you can anticipate? And I'm thinking really, Kerry, of branching out a little bit. Maybe, I don't know if I do another newsletter, but I might do a course of some type that would be kind of an overall perspective on how to invest in general and, where the precious metals fit in and, investing for the future or retirement planning for the future, because I think most that listen to your show understand full well that the dollar demise is almost inevitable, probably within their lifetime. But there are ways to survive with a balanced approach, which I'm outlining now, that is, pretty common sense. Most people don't, that I could produce, let's say, a course perhaps. I'm just working through my head. That would be something that the average person wants, because, most people that listen to me are like metals focused, as they should be. That's what I spend most of my time studying. But, they got to remember, I started investing when I was 16. I got in the cellular phone industry before anyone knew what a cellular phone was. My father did quite well. And so the idea that, I got a pretty good investing knowledge on a big perspective is true. And also how to, again, repeating myself, how to allocate properly in the environment we are that does diversify you, but diversify you in a situation where inflation, deflation doesn't matter to you personally, because you've invested and diversified properly to where you have not very much exposure to the financial markets, a lot more exposure to the physical economy. Does that make sense?
Makes a lot of sense, and leads us to here you're working on a project right now.
Right. We are. This is one that subscribers, members to the Morgan Report are well familiar with. And this is, and I'm going to sound hypey here, and I don't want to, but this is probably one of the best, if not the best, silver projects I've seen since I started the Morgan Report on the internet. And there's been some good ones, and I'm familiar with all of them. And our lead, our senior analyst, went down and did the project review. And as you know, Kerry, and I don't know anyone else in the industry that does this, but maybe you do. And if you do, please voice it, because to my knowledge, we're the only ones that take a camera on these site visits and film it.
Yeah.
So that our members that pay us, that are really interested in these type of opportunities because they want to see it for themselves, which means they're really going along for the ride for a pittance. The basic service, well, you don't get this on the basic service. It's about $10 a month. The next level up is $270 a year. So what, $20 a month? You get to ride along with us and see the project, see the interviews. And then, of course, there's the full written report that goes along with it. But the reason I'm a little remiss is because of, the authority figures out there. This stock is really around 6 cents right now. And I'm not a big fan of low-price stocks. But I am a big fan of this management, of this project, of the grades that are superior. And they just put out in the public domain, which I can talk about now because management had tipped me off earlier, that they have great gold grades and some iridium grades as well. well that only add to the sweetness of what this rock is worth. So this is something, again, I'm excited. I sound excited because I am excited. This is an opportunity. In fact, what I said for our members was very seldom in my life do I recommend averaging down, because averaging down can cause you to go broke. Now, the way I set up the Morgan Report is when you do a speculation, and this one is, that you're only allowed to put in a certain amount of money and no more. So if you made a $500 bet and that's what you could afford to lose, making a $1,000 bet, I'm going to guess doubling down, you probably could afford to lose that as well. Not that I want anyone to lose any money, but the idea being that, if you're already in this project, and a lot of our people are, this is the time at this price to go ahead and double down, because we are very, very confident that over time, this is going to be such a noteworthy mine that it's going to be on the tip of everyone's tongue. There's drawbacks. One is the country.
Yeah.
But I've gone, again, we took the trip there. We saw it. And basically, and not only this country, let me just say it in a general way, Carrie, if you might, and that is that a lot of these countries out there that have, nationalized or thought of nationalizing or nationalizing certain, they've learned really the hard lesson of true free market capitalism, which is, profit is not a bad thing. Incentive and competition actually works. And that if we just leave the hands off and let the people do what they do best and don't interfere, then we become richer. Oh, what a concept.
Who would have thunk?
Yeah. So these, I'm convinced on this particular part of this country, and this is true of like Argentina as well, that, you kind of have to know the intimate details of what part you're in.
Right.
To make the correct determination of what the risk level is. And we have. And this one, I think, is definitely worth the risk. In fact, I think, I'm being a little bold here, but it wouldn't surprise me that, a year or two out, that this particular situation is where the government's kind of like supporting it or whatever. Really? Well, as bizarre as that might sound now, because, the government, no matter which one anywhere, is a collective system. They're like, and this is the collectivist attitude, and my thoughts on that. I won't go over them.
Yeah.
But if you are making the whole country richer with a hands-off attitude, and you screw it up every time you put your hands on and try to over-regulate it, or then obviously, if you learn that lesson, and I think these folks have, they're going to say, geez, you hit the stove too many times, it burns every time. How about we don't touch the stove? How about we don't interfere and let these people produce? And the more they produce, the more the collective is able to get away, is able to benefit from it. That's the bottom line. And I know that's a situation in this case. So probably oversold it, but it's something I'm really excited about. Yes, I own this company. Yes, everyone that works with us owns this company. But if you really want to get a taste of what we do, this is the opportunity, because we go down, we film it, we do a financial report that's equivalent to anything on Wall Street, probably better. We do give you the pros and the cons, and certainly at that level of service, you're allowed to email me, your questions, and you're guaranteed an answer. Now, some of them we can't answer, so just to be clear, is like, David, I own XYZ Mining, and I like ABC Mining. Should I sell my XYZ and buy ABC? I cannot give individual advice. That I won't do, can't do. But I can certainly comment on anything that we've done in the Morgan Report. And, and we've gotten very positive feedback, throughout the years. We had negative feedback. Of course we have. No one in any endeavor in life, from my experience, gets it right 100% of the time. But,
no, I haven't seen that yet. So interesting, really interesting. I'm going to check it out myself. And David, we got to go. Just tell us again where we find you.
Sure. Just get on the website, themorganreport.com. You'll find at the bottom our Twitter feed, our YouTube channel, how to get on the free report, how to get the 10 rules of silver investing for free, how to sign up at silver123.net for opportunity to save in silver and gold on a monthly basis. Easy as pie. Takes 10 minutes and you're there accumulating or silver stacking to your benefit.
All right. And you'll always find the links on Financial Survival Network in the show notes to any interview we do. And don't forget to sign up for our free newsletter and free webinars. David, always a pleasure. Thanks so much for being on.
Kerry, thanks for having me.
The Financial Survival Network. It's all about what's next.